This is your LMAX Exchange technical update for Thursday, June 22nd, 2017. Euro dollar. So the euro is holding up above that key 111.10 support right now, and while it holds above that support, there is still risk for a more immediate retest towards the August 2016 peak at 113.67, which starts to get us up into that medium to longer term resistance between 114 to 117. But if the market does break down below 111.10, that will set the stage for a corrective pullback that should take us down towards a measured move in the 109.25 area, but at which point the market will try to probably adhere to this uptrend since the 2017 low, putting in a higher low around 109.25 in favor of a bullish resumption. With this trend, we need to see a break back below 108.40. That's a confirmed higher low that we saw back on the 11th of May to negate the uptrend. So even if we see setbacks over the coming sessions below 111.10, the structure is still constructive, and the market will probably be looking for a higher low in the 109s, ideally by that measured move in the 109.25 area. Sterling dollar. So cable has been pulling back slowly over the past several sessions as it breaks down below that key previous resistance zone at 127.75, that range high that had capped gains after the market put in that plus 30-year low at 118.40 back in 2016. And from here, there is still risk for deeper setbacks that could take us down into the 124s before the market then finally looks to put in some form of a higher low and continue towards an eventual measured move extension at 135. That measured move extension comes following that breakout above that critical resistance zone at 127.75 in April over here, which suggested that the market was putting in a longer term base and opened the door for that recovery towards 135. So although we have seen pullbacks in recent sessions, and although we could still see the pullbacks extend into the 124 area, the market is now expected to be supported in favor of additional upside. The key support level right now is 123.60. That's the low that we saw on the 10th of April. Only back below there would sort of delay the more immediate recovery outlook for sterling dollar. But again, there is still risk for pullbacks before the market extends up towards eventually over the coming weeks the 135 area. Dollar yen. So dollar yen continues to be confined to a downtrend despite a bounce that we saw last week. The market now is holding below 112.13, which is the first level of key short-term resistance. But ultimately, while the market holds below 114.37, the downtrend remains firmly intact, and there is risk for additional declines back down towards and below the 2017 low, which comes in from the month of April on April 17th, just shy of 108. Euro Swiss. So with Euro Swiss, the market hasn't been doing much, but overall the downtrend here remains intact while the market remains capped below that 110 barrier with risk for a resumption of declines back down towards critical medium-term support towards 106. Only back above 110 would force a shift in the structure. Aussie dollar. So Aussie is traded up towards and above some previous resistance around 76 at 76.11. You can see there's that high that we saw on the 17th of April. But the reason why we have this line here is because the market wasn't able to really establish above that previous resistance and is looking like it wants to roll back over. If we see a breakdown now below 75.20, that will strengthen that outlook and accelerate declines back towards recent lows that we've seen from early in May around the 73.30 area. Dollar CAD. So dollar CAD is starting to see its recovery after the market traded down to as low as 131.65 after correcting from that 2017 high just shy of 138. It looks like for the market maybe wanting to finally put in that higher low or some form of a low in favor of a resumption of the longer term uptrend, but a break back above 138 would be required to continue that uptrend and open the door for a fresh move towards the 145 area. Right now, short-term resistance for this market comes in at around 135.50, 135.47. That's the high from the 2nd of June. A break above there would be required to really strengthen this outlook and accelerate gains. If we do see setbacks below 131.65, that will expose 130. But again, it doesn't change the longer-term bullish outlook here, with the market expected to then be supported in the 130 area. Kiwi dollar. So the New Zealand dollar has traded up over the past several days, putting in a very nice recovery out from 2017 lows in the 68 area all the way back up to and above 73. There is a lot of strong resistance up above 73 and towards 74, and so the market could be in the process now of rolling over, but we would need to see a break and close below the 71.85 level. That's the low from the 15th of June to strengthen this case and accelerate declines. SPX 500. So although the S&P 500 has pulled back over the past couple of sessions, this does nothing to compromise a very intense uptrend in this market, one that's been going on for several years, and the market is now focused on an upside extension towards a measured move at 2480. That follows the breakout above 2400 after the market had traded to a record high 2400 and then corrected down to 2320. So that 80 points there projects 80 points to the top side, which takes us up towards 2480. We would need to see a breakback below 2400 at a minimum to alleviate immediate topside pressure. Gold. So gold continues to retain a constructive outlook. If you go back to 2016, the market has been recovering, putting in higher lows and higher highs, and so the market could be poised to continue this uptrend right now, basing out by the current low that we've seen this week, which comes in around the 1240 area. Ideally, the market holds above 1230 in favor of that next upside extension towards through 1300 and towards a measured move by the 2016 peak at 1375 further up. Only back below this previous confirmed higher low in the 1214 area would compromise the constructive outlook for gold.